You upload the company logo. You enter the company's name here. You set your base currency, Ghana cedi or whatever currency you are using. Then you enter the business address. Okay, you enter your phone number, contact number, then the type of business you are running. So retail, manufacturing, technology, healthcare. You select the applicable option. Then you set your financial year end, whether 31st December, 31st July, 30th June. Whichever your year end is, you set it. After that, you just save. Okay, then you come here to set your currency. Okay, so you also set Ghana cedi as your currency. Then tax rates. Assuming you are VAT registered, let's say you are VAT registered, you need to set your tax rate. You set it here. Okay. Then I think these are the key settings you need to do. Okay. So having said that, I think that we can get started with the questions. Okay. All right. So number one, Dan Deal Limited, a company into the manufacture of shortbread biscuits, was incorporated as a company limited by shares on 1st January 2026 with a stated capital of 500,000. The shareholders have paid for all the shares. The company opened a current account at EcoBank Ghana Limited head office. The proceeds from issue of shares were paid into their bank account. The company does not keep cash at the office but deals in checks and bank transfer. Okay, so this is a transaction we have here. We need to look at how we can enter this transaction into the software. So another important thing you need to do is you need to create your chart of accounts. Okay, the chart of accounts are the various accounts you use in the organization, like asset accounts, expenses accounts, revenue accounts, equity account, liability accounts, income accounts. Okay, those are the charts of accounts. So to access the chart of accounts, okay, you go to financial report here. Okay, then you come down to chart of account here. Okay, come to chart of accounts. Okay, so we have some default accounts. Okay, but you can also create additional chart of accounts. Okay, so per the question, we need to create an account for EcoBank. They deposited the money in the EcoBank account. So EcoBank is a bank account. Okay, then we also need to create an account for stated capital. Okay, we also need to create an account for stated capital. So these are the two accounts we need to create. Okay, so let's create the account for EcoBank, the bank. Okay, so we you click on create new account like this. Okay, then we have sub ledger, we have parent ledger. So you can create a parent account. Okay, and under the parent account you can have different sub accounts, or you can just create just sub ledger without parent accounts. There are some companies with a lot of accounts. So let's say if you take account receivable, some companies may have a lot of customers under accounts receivable. So the parent account will be the account receivable. Then the customers account, the individual customers account becomes the, let me say, sub ledgers. Okay. So this one, the bank account, is just a standalone account. So we will just create it under sub ledger. Okay. So The account name is EcoBank. Okay, EcoBank Ghana. Okay, or let me just make it EcoBank. EcoBank Ghana City. Okay. Then the the account type, is it an asset, a liability, equity, revenue, expense, other income? So what do you think? This account, what type of account is it? We are learning, so let's see how we can. So what type of account is the EcoBank account we are trying to create? Hello,
As
Abiti.
bank
Asset
account.
account.
Revenue.
Please, please, can you come again?
Cur-
Somebody said revenue. Somebody,
Current account.
please, what type of account is it?
Current account.
Current account. Is it asset, liability, equity, revenue,
Yeah, and
expense?
asset.
Yeah, it's an asset. Yes, correct. Okay. So you select assets. So you scroll down here. So here you can use, every account should have an account code. Okay, in the account system, every account should have an account code. So we have two options. You can use the system generated account codes, or if you want your own customized account codes for your accounts, you can check here. So when you check here, you enter the code you want. But let's use the system code. So we leave this side.
We we can see your screen, no. Please.
Oh, you can't see my screen. Please,
He's alone.
is it the case for everybody? Or
No,
uh,
It's on
no,
his.
No.
okay.
he's
Oh.
alone.
Okay. Okay, then I think it's coming from his side. Okay, so so under the assets category, we have different types of assets. We have two main types. We have current assets and non-current. So the bank account, what do you think would be the category? Would be current or non-current? This one we are learning accounting. A bank account, is it a current asset or a non-current asset?
The current
The
Current.
current has.
Very good. So you said select current assets. Then that is not the end. When you come here, we have different types of current assets. So you have to also select the type of current asset it is. We have inventories, trade receivables, other current assets, cash and cash equivalents. So which one of these subcategories does it fall under? What do you think?
Cash and
Cash.
cash equivalent.
Very good. So you select this. Okay. Then you check here. This is a bank account. You just check like this. So once you check, you enter the bank name. So EcoBank Ghana Limited, like this. Then then you enter the account number. So let me see, this is the account number. Then the currency. So this is Ghana City account we are creating. Okay. Then this is description. You can describe the nature of this account. Maybe this is a current account, or just a description of the account. Okay, then you click on create account. Yes, so we have created our bank account. So we need to create another account for the stated capital. So you click on create new account here. Okay, then we come to account name is stated capital. Okay, then account type. Okay, so this one, is this an asset, liability, equity, revenue, expense, other income? What do you think?
Equity.
Yeah, so it's equity. Very good. Yeah, then we scroll down. The under equity, we also have subcategories. We have share capital, other components of equity, share premium, non-controlling interest. So this will be share capital. Okay, this is share capital. Okay, so and that is it. Okay, so we have created our two accounts. Okay. Now, after creating the two account, we need to enter the transaction, this transaction here in the account system. Okay, all right. So this type of transactions, these are not regular transactions. They are one-off transactions. We have regular transactions like sales and expenses, but for owner's contribution or issue of shares, they are not regular. They are not regular transactions. So for irregular transactions, we usually use journals or manual journals to record them in the accounting system. So for most accounting softwares, for irregular transactions like maybe passing of depreciation, prepayments, adjustments, those kind of entries, we use journals to pass them. All right, so go. Let's use journals to pass this transaction. So we to access journals or manual journals, you go to financial report here, and you come to manual journal here. So you click it. So when you click it, you will see the journal page. Okay. So you select the currency. Okay. The transaction is in Ghana cedis, so we will select Ghana cedi as.
I'm
Okay,
lost. Oh.
you are lost. I'm coming. This is exchange rate. I'm coming. Let me just a moment. I'm coming. Uh, Let me set this to Ghana cedi. Okay, please. Where are you stuck at? So we want to record this transaction in the software, and we realize that this transaction has two accounts. We have bank account and then the share capital account or stated capital account. So we have created the two accounts in the system. Now we have to record the transaction in the system. Okay, and I explained that these are once in a while transactions. So usually we use manual journals to record them. Yes. So I was trying to demonstrate how to access the manual journal. Okay, so to access the manual journal, you go to financial report here. So the system has been, or the interface has been categorized into let me say models, or yeah, let's say um yeah, let me say models. So we have revenue aspects, revenue section. So this side we used to record all our issues relating to revenue and receivables and customers. Okay. Then we have expenditure cycle. This side is for expenses, recording expenses, suppliers, that's where that's what this side looks at. Then we have sustainability. Okay, this one will jump it for now. Then we have the financial reports. Okay, here you will find all your financial reports, your budget, trial balance, general ledger, journals, statement of financial position, chart of accounts. So all the financial report issues are here. Then we have payroll. Okay, this side is for payroll. To create your payroll schedules, create employees, PAYE. Okay, they are here. Then we have taxation. This side talks about taxes. Okay, so sales tax, input VAT, withholding tax, capital allowance, all those are here. Then we have inventory. So this side talks about inventory. All your inventory records are here. Then this side is for projects. So assuming your business is project based. So side that you account for your income and your expenses based on the projects you undertake. So let's say if you undertake project A, you want to track the income and expenses for that project. So in that case, you use this option. Yeah. So that's the brief a brief of the various features. Okay. So the manual journal falls under financial reports. Okay. So you come to financial reports, come to manual journal, and then the manual journal page will open. So once it opens, you select the currency, which is Ghana cedi. Okay, the transaction we are trying to record is in Ghana cedis. Okay, and then the journal number. So every journal should have a number and the date. Okay, the date of the transaction. So the date of this transaction is 1st January 2026. So I will have to set this one to 1st January 2026. Okay, then you describe the journal. Every journal should have a description. Okay, so being owner's capital contribution. Okay, something like this. Okay, so journals should always have at least two legs: the debit and the credit. Okay, so let's look at the transaction here. So which account are we going to debit and which account are we going to credit? Per the description of the notes. Anyone to help?
Hello, sir. I
Yeah.
think you will debit your bank account, credit stated capital account.
Okay, very good. So we'll debit the bank account and then we'll, we'll credit the stated capital. Yes, that's correct. Okay, just a moment. Okay. So we'll debit the bank account. Okay, of 500,000. Okay, then stated capital. So 500,000. Okay, that's it. So we have the debit and the credit here. The debit and the credit there. So we will save. You can attach a document to the journal. If you have any journal, if you have any documents, maybe the bank statements or any agreements, you can attach it to the journal. After that, you click on post journal. Okay, so once you put the journal is saved. Okay, So when we go to our bank ledger, okay, when we go to our bank, the EcoBank ledger, we should see the transaction in our EcoBank ledger. So to access the ledgers, you go to the general ledger here. Okay, you click it. When you come here, you see all the ledgers you have. So now you can see EcoBank, we have 500,000 as the balance. The share capital also has 500,000. So you can open it to see the transactions in the ledger. Okay, so it has only one transaction. Okay, and then when you come to the dashboard, okay, you will see that this section is liquidity. This section has all your bank account balances. So far we only have one bank account. Okay, and we have 500,000 in it. That's the owner's capital they introduced into the business. Okay. All right. So let's continue. So let's look at the next transaction. The company purchased the following fixed assets on 5th January 2026: motor vehicle 70,000, office furniture, computers, computer software, internet server. Yeah. So we need to create ledgers for all these: motor vehicles, office furniture, computers. Okay, so let's go to financial report, chart of accounts. I come to create new. Okay, so motor vehicle. Okay, so this is an asset. Okay, and then this is a non-current asset. Okay, then under subcategory, this is PPE, property, plant, and equipment, like this. Okay, then you save it. Then we have what else? We have office furniture. Okay, office furniture is also a non-current asset. Okay, furniture and fixtures. So it's an asset. It's a non-current asset. It's PP. Okay. The next one is computers. Okay, so computers too. So we can make it computers and accessories. So assets, non-current assets. PP. Okay, the next one. Computer software. Computer software. So let's go back. Uh, computer software. Okay, so it's an asset. It's a non-current asset. It's an intangible. Computer software is an intangible asset. So you select intangible assets. Okay. Yeah. Then internet server. Okay, so internet server Internet server falls under computers and accessories. So we will we will not create a separate account for it. We will put it under computers and accessories. Okay. So we have our ledgers. So now we can create what's the name? We can enter the transaction in our accounting system. Okay, so we go to so this is an expense. Okay, it's a purchase we have made. Okay, so we will go to the expenditure cycle. Okay, so there are two ways of going about it. You can create a bill for it, a bill, or you can use instant payment. Usually, we create a bill when it's a credit purchase, like you purchase the item, sorry, and then you expect to pay later. But instant payment is an immediate payment. Okay, so it's like yeah, cash payment. Okay, so here it's let's use cash payment or immediate payment, instant payment. Okay, so you click on instant payment, you click on add new payments. Okay, now we enter supplier's name. Okay, supplier's name. We need to know. So let's create a supplier. So to create a supplier, you go to expenditure cycle, create supplier. Okay, and add new supplier. So let's say we bought this item from maybe Kingdom Books. Let me see. Okay, let me see. We bought this item from just an example. Kingdom Books Limited. Okay, so we come here, instant payments. Okay, then new payments. Okay, then we select the supplier. Okay, then we set the date. And that's 5th January. Then the currency, that's Ghana cedi. Okay, then we have payment type. We have single transaction or split transactions. Okay, so here we made a number of purchases. Okay, we have one, two, three, four, five purchases. So we are going to use split so that we can enter multiple transactions in one record. Oh, sorry, in one record. So if you use single transaction means you're only entering one account. Okay, you are only entering one transaction. But split allows you to create multiple accounts. Okay. So the first one is motor vehicle. So I will just type motor vehicle. Then the description, maybe purchase of motor vehicle with registration number, maybe um, maybe GR 123 4 26. Then you enter the amount. That's 70,000. Okay, so that's one. Then you click on add so that we can enter the other ones. Office furniture 12,000. So furniture 12,000. So purchase of office furniture. Okay, then the next one is computers, 15,000. So you select the account, purchase of maybe laptop computers. So usually when you are describing, you have to be detailed enough. So you have to describe the type of the computer or the type of the assets. If it has a serial number, you need to indicate all these details. Okay. So, but because of for the purpose of the training, I'm just simplifying it. But in a practical accounting entry or in a real world situation, you have to enter the details of the assets. Okay, usually for audit purposes, when auditors come, they want to know more on on the entries that you have made. Okay, so 15,000 here. Okay, then the next one, uh, computer software. That's 18,500. So computer software is an intangible asset. A computer software. Okay. Okay, so purchase of computer software. So 13,500. Then the last one is internet server. So internet server will still be on the computers and accessories. Okay, so purchase of internet server. Okay, so the amount is 11,000. Okay, so everything is 121,000. Okay, so these are the debits. All these are debit entries. Okay, so you need to select our credit entry or the payment account. Okay, so we are paying from our EcoBank account. So you select the EcoBank. Assuming that withholding tax applies, assuming you are paying withholding tax on it, you can check apply withholding tax. Okay, and then you enter the withholding tax type. So this is goose. This is just an example. So let's see, this is goose. So goose is 5%. So select this. Okay, so withholding type, withholding tax account. You need to create one. The withholding tax amount. Okay, but we are not applying withholding tax, so we leave it out like this. Then description of the transaction. So purchase of fixed assets. Okay, like this. So then you can upload the receipts, invoices that you received when you purchase this item. You can upload those documents here. If you have them, then you save them. Okay, so this is a transaction. Okay, you can always edit it. If you want to edit it, you can click here and edit. You can also delete it. If you want to delete it, you can delete it. So now let's go to our bank account. So you can see our bank account has reduced because of the purchase we made. Okay, please, any question so far? Are we good? Okay. Okay, so we can continue, right? Okay, so we are done with this. Then the third Note: the company purchased raw material for 100,000 on 6 January for production. 45,000 of this amount was paid, while the remainder was bought on credit. So this is a credit purchase. So they purchased raw material for 100,000. They paid 45,000. There's a balance which has not been paid. So here, because it's a credit purchase, we can create a bill for it. So let me create a bill. Okay. So this is how the bill interface looks like. Okay, so we have the heading, create new bill. If it's a project, assuming you want to the bill relate to a project, okay, you can check that this is a project. Okay. Then if it's a cash purchase, assuming that you are paying outright, you can check cash purchase. If it's credit purchase, you can uncheck it. So it become credit purchase. Okay, so here it's a credit purchase. Okay, then you set the currency. Okay, we only have one currency, so Ghana cedi. Okay, then you enter the supplier's name. So we can create new supplier. So let's say this one we bought this from maybe raw materials. Maybe we bought this raw materials from maybe K Apia Limited. Okay, so that's the name of the supplier. So we select this. Then the dates, 6th January. So 6th January. Okay, so you have the bill number here. Okay, so you enter the description. Purchase of raw materials. Okay, so you select the accounts. So raw materials, we don't have, we can create inventory for it. Okay, so you can create an account for inventory. So assets, current assets, inventories. Okay, so we select inventory, the quantity. So 100, the price 100,000. Okay, okay, so then you add payment. Okay, because we made some part payments, you click on add payments. Okay, so you enter the payment date, which is 6th January. The bank account we paid from EcoBank Ghana. How much did we pay? 45,000. Okay, then we click. Okay, so we paid 45,000. The balance is 55,000. Okay, so once you are done, you can save it. Okay, so we have saved this transaction. Okay, on 10th January 2026, the company made cash sales of 45,000. So we are here. Company made cash sales of 45,000. So we go to here, it has to do with sales. So we go to revenue. Then we create new invoice. Okay. So we have to create a customer. So maybe the name of the customer is Abba Mansa. So there's a customer. Okay, so we select the customer. Then we describe the nature of the sales. So sale of maybe goods or whatever you sold. Maybe sale of 10 boxes of biscuits. Account type, select sales. Um, Quantity. So you enter the quantity and the price per unit. But since we don't have the quantity, let's just use one quantity one. The price 45,000, so that we'll get the total here. If there's a VAT component you add, if there's any VAT on it, okay, you select. But here there's no VAT, so no VAT. And this is a cash sale, so you check cash sale. Okay, so cash sale, you click on add payments. Okay, so 26,000. Hey, you enter the date, which is 10th January. Okay, this is 10th January. 10th January. Accounts, EcoBank, 45. So okay, so you can upload any attachment here. Okay, so when you finish, you save it. Okay, so we have saved this transaction. Okay, the next one is 11th January. The company made cash sales of 12,000. Okay, so this is also a cash sale. Okay, so what you can also do is you can copy an existing invoice. Okay, let's say it's the same customer. So and it's a regular customer. You regularly make sales to the person. You can copy an existing invoice and edit it. Okay, so let's say that this second sale is from the same customer. So let's copy the existing invoice. So to copy an existing invoice, you go to all invoices. Uh, so here you see the list of invoices we have created. So far, we have created only one invoice. We created only one invoice. So to copy an invoice, you come to the extreme right. You see action here, copy. So you click on it. It will copy an invoice for you. So with the copy invoice, the details will be there. You see the details of the old invoice will be there. You just need to edit some few parts and then you are good to go. So here the amount is 12,000. Okay, so I have to change, and the date is also 11th. Okay, and then this is 12,000. Maybe this is maybe 8. Okay, and then uh, the payments. Okay, EcoBank 12,000. So copy and save. Okay, so we have saved this invoice. Okay, so now we have two invoices. Okay, so the next one on 15th January, the company made credit sales of 25,000. This is credit sales. Credit sales. So credit sales means the customer did not pay. So you go to create new invoice. Let's say this is a different customer. Maybe the name of the customer is John Doe. Okay, so this is the name of the customer. So you select the name of the customer here. Yeah, so sale of biscuits. Maybe 5 packs of biscuits on credit. So account, you select sales quantity 25,000. So this is 25,000. Okay, 25,000. So this is a credit sale. So you uncheck this so that it is a credit sale. Then you save it. Okay, so that is it. So this is done. On 17th January, the company made cash sales of 80,000. So this is cash sales. So that's 18th January. Sale of goods. So you select the customer. Okay, one. That's 80,000. So this is cash sales. So you click on add payments. You select your bank accounts, EcoBank. So you save invoice. Okay, so that is it for this. On 20th January, the company made credit sales of 25,000. Credit sales of 25,000. So that's
Mm.
20th.
Where are you going?
Sale of biscuits on credits. So sales. The account is sales. Amount 25,000. One. So this is on credit. So you check credit sale. Okay, then you save it. Save it. Customer is required. So I have to enter the name of the customer. Okay, so that's this one is gone. On 20th January, the company collected 20,000 from trade debtors. Okay, so somebody who is owing paid us 20,000. So let's go to our list of invoices. Okay, so let's say that this person Abamansa is owing us 25,000. So let's say Abamansa paid the 20,000. So you click on that invoice. You come here, add payments. Select the bank account. Please, can you mute your microphone? Hello, can you mute your microphone? So
I
20,000.
will gladly do that for her. The host will do that. I have done that, so please proceed.
Okay, good, good. All right. Thank you. Yeah, so 20th January. So 20th January, where is it? So 20th. Okay, so this, okay, so update invoice. Okay, so yeah, then, so this one is done. Then 23rd January, the company pay utility bill of 8,000 utilities. Okay, 23rd January. So this will be expenses. So you come to expenditure cycle, instant payments. Okay, then you come to add new payments. So let me see whether we have utility ledger. Okay, let me see. No, we don't have utilities. So let me create utility ledger. So I go to chart of accounts, create new ledger, utilities. Okay, so this will be an expense. So you select expense. Okay, then the type of expense is it operating expense? This investing, financing, income tax. So this operating expenses. Expense classification is it cost of sale, cost of service, general and administrative expenses. So utilities are general and administrative expenses. So and then we just create accounts. Okay. So let me come back to instant payments. Click on new payments. Okay, then set the date. The date is 23rd. Okay. So the supplier, okay, let's say this is the supplier. Okay, so the amount is 8,000. So 8,000. So utility debit account is utilities. Okay. Okay. The payment account is EcoBank. We paid it out of our EcoBank account. Okay. So description: payments of utility. Maybe for January. So if you have any receipt or support document, you can upload it here. Like this. Then you save it. Okay. Then we have on 23rd January, the company paid rent of 12,000. Rent. Okay, so we don't have a ledger for rent. So I think we don't have. So let's create a ledger for rent. So you go to financial reports, you go to charts of accounts, create new account. So rent expense. Okay, then you come down here to expense, operating expenses, general and administrative expenses. Okay, that's it. So we come back to instant payments. Add new payments. Okay. We enter the name of the supplier. So let me create another supplier. So maybe this is goodness goodness properties. Okay, so let me go back. Okay, add new payments. Supplier name is Goodness Properties. And the date is 23rd January. So 23rd. Okay, 12,000. The debit account is the rent expense. Then the payment account is EcoBank. Okay, so maybe the description is payments of rent for maybe January 2026. So if there's any agreements or support documents, you can attach it here. Then you save the payments like this. Okay. Okay, so we go to the next transaction. On 24th January, the company bought office supplies on credit. So the amount is 9,500. Office supplies. So this is credit purchase. So we should use a bill. Okay. So create a bill. And then here we on uncheck this to make it credit purchase. Then let's select Kingdom Books. Then the date is 20. So this is how a typical accounting software behaves, or these are the key features of a typical accounting software. You have to create bills, invoices, and in creating bills and you need to enter supplier's name, the date, the description of the transaction, the yeah, you need to select the account, the ledger account. Okay, so if you know how to operate one accounting system, maybe if you know how to operate QuickBooks, you can easily learn other accounting softwares because the principles are almost the same. So the key is to understand the fundamentals or the basis. So if your fundamental is weak, it will affect your understanding of how the soft.
Your exchange rate.
Yeah, if the fundamentals are weak, it's going to affect you. The exchange rate will expose you. So if you understand the fundamentals, you can, I mean, learn any accounting software. Yeah, yeah. So that is just by the way. So, um, okay. So this is pictures of office supplies.
Hello, sir.
Hello. Yes, sir.
Please, may I know if we can get the recordings? Because I can say I haven't grabbed anything since the inception because of the network challenges.
Okay. Yes. Yes. I have the recording. The recording is ongoing. So
Okay.
you.
Because I haven't gotten anything
Oh,
because of the
so.
network off
Uh,
and on, off and on, off and
oh, sorry about that. Sometimes the network
okay.
can misbehave, but
Hmm.
yeah, we'll share the recording so that you can at least also uh,
Okay. Thank
watch it
you.
later. Okay, so we select the account. So the account is very important because that will what will feed into the report. So this is office supply. So this should be stationaries. Okay, so I don't have stationaries here. Okay, so let me create account for stationaries. So stationaries and printing. So this is an expense. Okay, this is operating expenses. This general and administrative expenses. Okay. So now I can select this. Okay, so the amount is 9,500. Now we save it. Okay. All right. So that's it for this one. On 26th January, the company paid for repairs and maintenance of 7,500. Okay, repairs 7,500. So let me see. Let me create another supplier. Good Goldsmith Enterprise. Do we have repairs? Sorry. Okay, there are no. Okay, we don't have repairs here. So let me create repairs. Repairs and maintenance. So this is an expense. So when you come down here, operating. So you select the supplier's name, the dates, 26th January. So click on add payments. So EcoBank 7,500. Okay, add. Then save. Okay. So this is done. On 27 January, the company paid for radio adverts 12,500. Radio advert 12,500. So maybe this is Adom FM. So they did adverts on Adom FM. So we create an account for Adom FM. So payments. Payment for radio advertisements. So we select the account advertisement expenses. Okay, then the amount is 12,500. Okay, so we have this. So this is a cash purchase or instant payment. So you click add payment, EcoBank. Maybe you can add description, full payment if you want to, and then due date 27th January. This is 27th January. Uh, okay, so that is it. On 28th January, the company made cash sales of 43,000. The, the company made cash sales of 43,000. So you come here, come to create new invoice. Because it's a sale, we are using invoice. Okay, so you enter the name of the customer, the dates, which is 20, 20, what, 28. Okay, so we come down here, sales. So it's cash sales. Okay, so we have, okay, so that is it for this. On 29th January, the company paid salaries of 26,000. Salaries, wages and salaries. So we come here, we um, come to bills. So you enter the person or the people you pay the salaries to. Okay, so let's say we pay the salary to the manager, maybe the CEO. Okay, which is maybe Mr. Adam. So we select payment of salaries. Okay, so uh, okay, we can create an account for salaries. So wages and salaries like this. Type of accounts, expense, operating, general and administrative expenses. Okay, so salaries 26,000. Add payments. Okay, On 30th January, the company took a loan of 100,000. The company took a loan. So a loan is not an expense. Neither is it a revenue or sales. So usually for such entries, we use a journal, okay, to pass entries like this. So we go to the manual journal. We go to financial reports. We go to manual journal. Then a loan. So it's between the bank and the loan account. So EcoBank. We don't have any loan account. So you can create a new account for bank loan, which is a liability. Here we select, let's say it's a current liability. So other liabilities we have trade and other pay, short-term borrowing. So let's say this is short-term borrowings. Okay, so loan, bank loan. So the amount is 100,000. So 100. So we debit the bank, credit the loan. Okay, like this. So we need to enter the dates, which is 30th January. Okay, 30th. So we can say being bank loan was secured from maybe Stanbic Bank. Like this. Then you post journal. Okay. On 29th January, the company sold the motor vehicle purchased on 5th January 2026. The company sold the motor vehicle. Okay. So here we need to do some workings here. So once the
Okay, so yesterday
yeah
you skipped this side because there was no amount.
there was no amount. Yes, exactly.
Yeah, you skipped it.
So yes, there's no amount here. Okay, so let's say that there's an amount. Maybe the company sold the motor vehicle purchase of maybe for. So how much is the motor vehicle? Is 70,000. Okay, for maybe 8. Okay, maybe for 65,000. Okay. Okay, so for a transaction like this, is neither a sale nor an expense. Okay, it's also a one-off transaction. So usually we use a journal to record such transactions. Okay, so we need to let's go back to so, so anytime you sell an asset, okay, anytime you sell or you dispose an asset or you sell, okay, now this is what's going to happen. Usually we sell, we put a price on the asset, so we have selling price. Okay. Usually whenever we sell an item, we have to calculate the profit. So the profit is equal to the cost minus sorry, the selling price minus the cost price to give us the profits. Okay, so we know that our selling price is 65,000. Okay, that's one. So let's see. So selling price is 65,000. Then the cost price is 70,000. This one 70,000. So here, would there be a profit or a loss? What do you think? Is there a profit?
A lot.
There's going to be a loss. Loss on sale.
5,000.
So there's be a loss of 5,000. Okay, very good. So okay, so we need to try and understand our double entry before we go and input it in our accounting system. So whenever we sell, it means we have to de-recognize the assets. We are selling the assets, so the assets has to be taken out of our books. Okay, so the debits and the credits will be like this. So first of all, we have to credit the motor vehicle. Okay, because we are taking it out of our books. Motor vehicle is an asset and it has a debit balance. So if you want to remove it, we'll credit it. So we credit it by 70,000. Okay, so that it will be taken out of our records. Okay, and when we sold the products, we this is a selling price. We received 65,000, so we have to debit our bank account, isn't it? By 65,000. But we received 65,000. Okay, so there's a balance of 5,000, which will be loss, the loss on disposal, or profits or loss on disposal, which is 5,000. So we have to pass this journal. We have to pass this journal for this transaction. Okay, so we will credit the motor vehicle, we debit the bank, and we credit profit or loss on disposal account. Okay, so let's go back to. So this transaction, we need to use a journal to pass it. Okay, so we can't use the invoice or the expense to pass it. So we come here, come to manual journal. Okay, so I think we don't have profit or loss accounts, profit or loss on disposal accounts. So let's create profit or loss on disposal. Okay, this is asset liability. This is other income. It can be other income, or yeah, this is other income. Okay, so okay, that's it. Okay, so we create it. So we debit the EcoBank, okay, by 65,000. That's the selling price. Okay, then we'll credit the motor vehicle by the 70,000. That's the cost. We are taking it out of the books, so we will credit it. Okay, then we'll debit profit or loss on disposal. by 5,000. Okay, so that the double entry will balance. Okay, then we'll save it. Okay, now I have to enter say disposal bin disposal of motor vehicle. So the the date is 29th. 29th July. Eh, 29th January. 29, yeah, like this. So when you finish, you save it. Okay. On 29th January, a customer paid for products worth 120,000 in advance. The company is expected to deliver the products in February 2026. Okay. Okay, what do you think? This transaction, how do you think we should treat it? Should we use an expense or invoice or journal? Looking at the nature of it. On 29th January, a customer paid for products worth 120,000 in advance. The company is expected to deliver the product in February 2026. Okay, so what do you think?
It's like, is this can this be described as accrued revenue?
Yeah, I mean yes, that's close. Yes, yeah, that's can be an accrued revenue. Yes, yeah, but this is customer deposit. I mean that is a deposit the customer has made before, um, but it's similar to accrued revenue. But it is not accrued revenue. This is customer deposit.
Okay.
So the customer has deposited some money already. We are here to supply the products. So it is a customer deposit. Okay, so customer deposit. So we have to use a journal. Ideally, this type of transaction to we can use a journal for it. But there's also a function or a feature for managing customer deposits. Okay, so you can create customer deposits here. Okay, you click on, but you can also use a journal to do that. Okay, so this is customer deposit. So you enter the amount the customer has deposited, which is 120,000. So you select the name of the customer. Maybe Abamansa deposited the money. Okay, so description: customer deposit for delivery of 50 packs of biscuits, something like. Then the date. This is 29th. Okay, so you save it. Okay. Okay, so we are done with this transaction. On 29th January, the company sold some product to a customer on sale or return basis. The customer has a right to return the goods within 3 months after the delivery. The products were sold for 80,000. The cost of goods sold is 60,000. Yeah, so this is also um so yesterday we said we'll pass an adjustment for between the bank and then the customer deposits. Okay, so the bank, which is the 80,000, and then also, so this is maybe deferred revenue. Maybe let's call it deferred revenue. So 80,000. So we have sold the product to the customer, but the customer can return the product. Okay, so we cannot recognize it as revenue until that period that the customer can return the product elapses. Yes, so as it stands now, it should be a deferred revenue. Okay, so let me create a journal for it. So let me create an account for deferred revenue. So this is a liability. Current liability. Trade and other payable. So let's choose trade and other payables. Okay, so EcoBank 80,000. Deferred revenue 80,000. Main recognition of sale sale main recognition of sale or return main recognition of sale or return basis. Okay, so is it the right description? Anyway, so 29th. Okay, so 29th January. So we post this. Okay. Okay. 21. The company's closing inventory as at 31st January 2026 was 12,000. Closing inventory is 12,000. So let's look at the company's inventory at the moment. So let me go to general ledger inventory. So as it stands now, the company's inventory is 128,000, but it has reduced to 12,000. Okay, at the end of the period. Okay, so we need to pass an adjustment to reduce the inventory balance to to 12,000. So it's 128,000 minus 12,000. So the inventory has reduced by 116,000. Okay, inventory has reduced by 116,000. So it means we'll debit, so we'll credit inventory by 116,000 to reduce it to the 12,000. Okay, then we'll debit cost of sales. Okay, cost of sales, which is 116,123. Okay. Okay, so let's go to let's let's go to, so this will also be a journal. Okay, so you come here. Let's create um let's create an account for cost of sales. Okay, so cost of sales. Okay, so this will be expense, and then when we come here, this will be operating expenses. This will be the classification will be cost of sales. Then okay, click on this. So we'll debit cost of sale by 116,123. Then we'll credit inventory by 116. Okay, so this is, so to recognize cost cost of sales for the period. Okay, or for the months. So this is, the date is 31st January. Okay, you save it. Okay, so what else? On 31st January, the company purchased additional motor vehicle at a cost of 150,000. This the same. This is, we've done something similar here. So let's jump that, and then what else? Distribution expenses was this, administrative expense. Okay, let's jump the rest. Okay, we've done a number of expenses and sales already, so it's the same principle and then entries. Okay, so we are supposed to prepare statement of profit or loss for the period ending 31st January, statement of financial position. Okay, so the beauty of accounting software is once you do your entries correctly, ev- all the reports will be prepared ahead of time for you. So when you come to the financial reports, you can view your trial balance. So when I click on trial balance, I should see my trial balance. So this is my trial balance. So these are my balances. We have the debits and then the credits here. Okay, so I can download in Excel like this. So I can view my trial balance here. So everything is prepared for you nicely like this. Yeah. So this is a trial balance that we have based on what we have inputted. Then we can generate our what's the name? Our profit or loss. Where's statement of financial performance? So this is our profit or loss statement. Let me select the month, January. Okay. Okay, so this is our profit or loss statement. Okay, so you can download it in Excel. I think that some of the dates were not in January. Let me see my sales ledger. Sales. Okay, let me see. Okay, this one is in July.
July, yeah, it's in July.
So let me edit it. So this one should be January. Okay, updates. Okay, so let me see. Okay, now all of them are in January. So our sales for January is 215,000. Okay, so let me come to our profits or loss. Um, January. Okay, so sales January. Our cost of sale is 116,000. Then our expenses are here. Then our profit is 49,500. Okay. So this is the balance profit or loss. So we can also look at the balance sheet. The balance sheet is here. Okay, so balance sheet we have computers and accessories, computer software, furniture and features. You see, we don't have motor vehicle because we've sold it. So you see, it's not here. And then we have the current assets. Then we have the equity, and we have the liabilities. Okay, equity and liability 888000. Total assets. Let me see. This 883000. This is 888. There's a difference of 3,000. No, this 888. Okay, so where is it coming from? Uh,
5,000 difference.
yeah, 5,000 difference. I think the 5,000 is it the loss on disposal? Yeah, I think that is what is causing it.
Yeah, it is loss on disposal.
Yeah, it's true. So I don't know. Okay, let me see something. Okay, let me see the profits. So it's
Boss.
hello. Yes, sir.
Yeah, I think the loss on the disposal should go to reduce the profit so
Yes.
that the stated capital can come down
Yeah,
by
exactly.
5.
It's true. Yeah, it's true. It's true. That is what is
Okay.
causing. I'm sure that's what's causing the problem. Yeah. So this is debit. Okay. I think. Okay. Come on. Let me do. So yeah. Let me check something. Yeah. It's rather go and reduce the. But it seems it is increasing it or. Okay. So this. Okay. Let me see. Okay. The loss on disposal is not showing here. It's not showing here. Okay. Okay. Yeah. So I'm coming. Let me chart of account. So let me make it an expense. This one. Let me. Okay. I can't change it. Okay. Okay. So let me. Let me go to the manual journal. Okay. Let me. Okay. Loss on disposal. Let me edit this transaction. Mm, 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 mm. Okay. Let me. Okay. Let me do this first. Okay, I'm coming. Let me create a new loss on disposal. Expense operating. So let me come here. Okay, let me edit it. Edit. So let me make this one loss. Let me use this account. Okay. So So let's go back to the balance sheet. Okay, so 883. Okay. Okay, now okay. So that is what was causing. Okay, so there's the balance sheet. All right. So we can download the balance sheet in Excel. When auditors ask for our balance sheet, we can download it like this. Okay, and then we can also look at the statement of changes in equity. Okay, so this is the statement of changes in equity. Okay, so this is how. So issue of shares is here. Stated capital. The profit or loss for the period. That's 18,500. Okay, so at the end of the day, our equity is 518,500. Okay. So this is our equity, statements of changes in equity. Then our cash flow. So let's look at our cash flow. So at the end of the day, our cash flow is 789,500. So let me see whether it's correct. Let me look at the balance sheet, the cash side. So okay, EcoBank is 789,500. Okay, so it means cash flow is correct. Okay. Yes. So this is how to prepare a complete set of financial reports or financial statements. Okay, so there are other features as well. You can have aged receivable analysis. If you want to see those who are owing you, okay, you have the receivable analysis. Okay, so from the receivable analysis, Abamansa is owing us. John Doe is owing us. Okay. Okay, so yes. Okay. All right. So I think that is it. Please, is there any question? Are we okay? Yes. So that is how to use Primer accounting software in recording transactions. Okay, so we have made it very simple and easy to use. Okay, so if you need an accounting software to run your business, you can contact us. We can help you to set it up for you. All right. All right. So is there any question, any suggestion, any comment as we wrap up the training for the day? Any comments? Any? All right. So if there are no comments, I want to say a very thank you on behalf of Chartered Training Center and Solvers Digital Limited. We want to thank all of us for your time.
Hello.
Hi.
Please, about the software.
Okay.
I think we cannot get it freely. You have to subscribe before you can get access to it. And before you can get it, I mean, it comes with money. So in this case, how can we get the software and be using it?
Okay, yes. All right. Thank you very much for the question. So So those who join the training, the software is 150 cedis a month. But if you join the training, we'll give you a discount of 50 cedis out. So you pay 100 cedis from like this month to December. You pay 100 cedis.
So meaning every month you have to pay 100 Ghana cedis.
Yes, for subscription to manage the system. Yeah.
Okay. But do you also have it on, the desktop? Because this one is online.
Yes. Yeah.
Do you have the desktop aspect
Oh no.
or desktop edition?
No, not yet. We don't have the desktop version yet. So
Okay.
Okay, so if the software you can install on his machine, right? Abby, that is what you're asking.
I'm asking whether you can get the software that you can install. Come again?
Yes, you operate straight from your browser. So
From the browser.
we are working on getting the app, so that you can purchase the app and install on your desktop. But for now,
Okay.
it is yes. Use the URL to log in.
Okay.
Yes.
Okay. So right now, if at the end of the period, a 30-month free trial, it means I have to pay 100 Ghana cedis, right?
yes, please. Yes. Yeah.
Okay.
Yeah.
All right. And also, I think yesterday I raised a question about the Excel automation when you were putting in the transaction, how you automated everything, and you said today you have to do it. I mean, before we tackle today's lesson, but
Okay.
you haven't done it, and based upon my internet challenges, I
Okay.
didn't grab anything. That's why I asked for. I'm asking for the listen, the video, so that I can I can follow.
Okay. Yeah. Okay. Okay. So I will share this Excel sheets on the platform. So that, but if you have any challenge, you can call me later.
My challenge is how you automate everything. If you saw how the formulas that you use to, because if you put in a transaction straight away, then it goes to maybe the P&L ledger and all that.
Yeah.
Just like
Exactly. Yes.
So how can we get to know all these things? Because when we were doing the transaction, it's like I was just watching. That's why yesterday I said, I was not okay.
Yeah.
Because I need to know everything.
Yes. Yeah. So
that I can.
So let me give
so that I can create my own template and all that.
Yes.
It is a lengthy formula.
Yeah.
It's a lengthy formula that you need to take your time and learn.
Hello, sir.
Yeah, it's very long. That's the problem. So
Hello.
hello.
I want to make a suggestion.
Okay, all right.
I want to suggest that you organize maybe a trading session on there, maybe at a fee,
Okay.
maybe affordable, because from the look of things, you can't finish it maybe within 1 or 2 hours.
Yeah, exactly. In fact.
That's exhausting. So if you can find time and organize another session a day or two for Excel,
Okay.
maybe a fee, that's it.
Yeah. I think that's a good idea. So that we'll take time to go through this system, like take our time
Yes.
to see how it is created, how we can use it. Yes. Yeah, it's true. So we'll try and organize another training on Excel, how to create something like this from scratch. So I think that will help us.
Okay.
Yes.
Okay.
I think that will really help us.
All right. Thank you.
Okay, you're welcome. Okay. All right. Please, is there any other suggestion?
Sir, this is a reminder.
Okay.
The recorded videos. Question.
Okay.
Can make appreciate.
Okay, the recorded
Hello.
videos. Hello.
Hi.
Yes, so after the session, I will upload the recorded videos so that you can have
The
access to them.
Okay.
All right. Thank you.
Okay, all right. Okay, all right. So thanks so much for joining. My co-host, Eben. All right, thanks so much for being our co-host for today. For a smooth experience. You know, today's experience is
My
better
pleasure.
than yesterday. you know, yeah. So
Yes, yesterday the challenges was not about that.
yeah,
I thank God and I thank God for the fact that
yeah,
today's session has been successful and they've had a patient to be with us. God bless you.
exactly, exactly. All right. So on this note, yes, one more thing. Yes. So the if you want a certificate for the training, like if you want to have a certificate for the training, you can contact us, but it comes at a cost of 50 cedis. So if just in case you want certificates, we can prepare one for you and then you can have it. All right. All right. So thank you. All
You
right.
said how much is the certificate?
Yeah, it's 50 cedis, 50.
Okay.
Yeah. Just in case you want something, a certificate. All right. So on this note, I want to thank all of us for joining. Those of us who have stayed throughout the session. We have Eric, Kofi, Alele, Isaac, Simon, Aben, Brown, Daniel, Emmanuel, Boache, Frank, Genevieve, George, Ofusi Yabwa, Ibrahim, uh, I Miss Soft Solution, Mercy, Patrick. Hey, Patrick. I have seen you. Good to see you, Patrick. Paulina, Redeemer, Tina, Yen. All right, so I hope to see you another time. All right, so thank you for joining, and we'll talk later.
Thank you too.
Okay. Bye bye.
Okay.
Hello, Senior.
What do you mean?
Yeah, hello.
Yes, so I wanted to know whether the recorded section will be shared.
Yes, please. Yes, yeah, we will share it for you. Yes. Yeah.
For yesterday too.
Yeah,
Okay,
yesterday too.
thank you.
Yes, yes, yes. It will be
All right, thank
available
you.
for you. Yes. Okay. All right.
Bye.
All right. So bye for now. Okay.